Hello everyone. Today, the 31st of January 2019, we are going to summarize the important news from the last 12 hours. Here's the first one.
Cryptocurrency lending firm Genesis Capital processed over $1.1 billion in 2018. South Korean fintech firm launches first won-backed stablecoin. Report: Alipay and WeChat Pay require Huobi to remove payment methods from OTC desk. Top Russian official urges parliament to discuss draft crypto bill without further delays. Bloomberg: amid bear market, crypto venture fund strategy wins out over hedge fund model. Aber CEO: crypto firms' route to remittances at scale will be complex but successful. Wikimedia Foundation partners with payments provider BitPay to accept BTC, BCH donations. Singapore: regulator warns of online scam claiming gov't adoption of crypto. Gaza's ruling group Hamas seeks funding in Bitcoin to combat financial isolation. Japan: major messenger line partners with financial giant to create blockchain alliance. Bahamian firm to boost local economy with blockchain-based sunken treasure project. Bitcoin approaches $3,500 as top cryptos see growth. Japanese finance giant SBI Holdings, blockchain firm R3 officially announced joint venture. Research reveals $1.7 billion obtained via crypto thefts and scams in 2018. Russia's Ministry of Education introduces system for tracking diamonds via blockchain. Local media: Iran reportedly in talks with 8 countries to use crypto transactions. Swift CEO reveals plans to launch POC gateway with blockchain consortium R3 Tech. Japanese IT giant Fujitsu completes test of blockchain electricity sharing project.
Please pay attention to details of those news.
Japanese IT giant Fujitsu completes test of blockchain electricity sharing project. Japanese IT firm Fujitsu has successfully trialed a blockchain-based solution to address inefficiencies in electricity surplus management, the company confirmed in a press release on January 29. Fujitsu, which partnered with local power distribution company Attendees, used blockchain to increase the success rates of power sharing, which is administered through a process known as demand response, (DOCR). An agreement between utilities companies and consumers, (DOCR) aims to anticipate periods of peak demand by ensuring surplus power is available to those who need it. The current technology involved makes DOCR an inefficient mechanism, Fujitsu says, something which blockchain has demonstrably helped improve. Fujitsu has now devised a system in which electricity consumers can efficiently exchange among themselves the electricity surpluses they have produced through their own electricity generation or power savings, the press release reads, noting. The result was an approximately 40% improvement to the DOCR success rate. The company hopes better efficiency will in turn inspire more consumers to sign up for Drive. The move is not the first venture into blockchain for Fujitsu, which launched a blockchain-based loyalty scheme for the retail sector in June last year, followed by plans for settlement infrastructure for 9 Japanese banks in October. This week, Cointelegraph published a detailed report into the current state of blockchain integration with the electricity industry. South Korean fintech firm launches first won-backed stablecoin. South Korea-based fintech firm BXB Incorporated has launched the first supposed stablecoin backed by the Korean won, according to a press release shared with Cointelegraph on Jan 29. There was an initial beta soft launch of the coin on AirSwap, a decentralized exchange platform, before the tokens were released on the global and Korean exchange, according to a Medium blog post by the co-founder of BXB Incorporated, Alex Friedberg, earlier this month. The coin, KRWB, is reportedly the first stablecoin produced in South Korea to be backed by the national currency, the won. The coin is purportedly supported with the 1:1 ratio. BXB Incorporated purportedly managed the mining and burning of KWRB in order to better assure liquidity via an Ethereum-based smart contract process using a multi-signature checkpoint and a third-party auditor. The initial deposit of 400 million won, $360,000, was collateralized to the equivalent value of KRWB tokens. The funds were generated by BXB Incorporated, as well as investment from Singapore-based BXB Capital Pte Limited. KRW will reportedly be available globally to any user to an ERC-20 compatible service. Users do not need access to the one in order to transact with the KRWB. BXB Incorporated is reported to be in ongoing discussions with South Korean and global exchanges, including plans to announce additional listings during Q1 2019. The KRWB is live on 3 exchanges according to a statement shared with Cointelegraph. While the largest stablecoins are pegged to the US dollar, digital currencies pegged to other national fiat currencies are emerging. Yesterday, Hong Kong-based money transfer platform BitSpark launched what is reportedly the first stablecoin pegged to the Hong Kong dollar. Report: Alipay and WeChat Pay require Huobi to remove payment methods from OTC desk. Alipay and WeChat Pay reportedly requested that crypto exchange Huobi remove their payment services from its over-the-counter, OTC, trading desk, local media agency Sina reported on January 25. Major Chinese digital payments providers, Alibaba's Alipay and Tencent's WeChat Pay, have reportedly sent legal letters to Huobi, claiming that using both their services and logos on the exchange's OTC market is unauthorized. According to information acquired by Sina, both Alipay and WeChat Pay have not provided Huobi with its payment services, nor given it permission to use their respective trademarks. However, Huobi's OTC trading platform reportedly allows users to upload QR codes from both systems in order to facilitate trading. Sina states that WeChat Pay and Alipay payment methods were still available on the official website of the Huobi OTC platform on January 28. On January 29, Huobi reportedly responded, claiming that the firm did not receive any letter and adding that a logo corresponding to a certain payment platform is just a way of showing a payment link. Huobi stressed that there is no cooperation between the parties, and all money transfers by users are considered peer-to-peer payments. Alipay first tightened measures against users who apply their Alipay accounts for OTC Bitcoin, BTC, trading in August 2018. The payment giant, which has recently hit 1 billion users worldwide, reportedly restricted accounts that use the system to transact Bitcoin OTC, as well as launching a monitoring system for key websites and accounts. WeChat, the 1 billion-user Chinese social media platform developed by tech giant Tencent, has previously taken measures against crypto-related accounts. In August 2018, the service blocked a number of accounts that were suspected of publishing initial coin offerings, ECOs. In September, WeChat blocked the official sales channel of Bitcoin mining giant Bitmain due to an alleged license violation. In late 2018, Huobi Group confirmed its plans to lay off staff amidst the continuous bear market. Recently, BIS, the United States-based strategic partner of Huobi, announced rebranding of its retail trading service from HUS.com to Huobi.com. At press time, Huobi is ranked the third top global crypto exchange, according to average daily trading volume of around $393 million, according to data from CoinMarketCap. Top Russian official urges parliament to discuss draft crypto bill without further delays. The chairman of the upper house of Russian parliament has urged MPs to expedite their work on digital economy bills that include a draft on crypto regulation, local news agency TASS reports on Tuesday, January 29. Valentina Matvienko, who has headed the Federation Council since 2011, spoke to officials from several institutions, including the Upper House Committee for Economic Policy and Russia's Ministry of Digital Development, Communications, and Mass Media. She asked him to investigate the reasons behind the significant delay with the digital economy bills, TASS writes. According to Matvienko, these bills have already spent a year in the Duma, the lower house of Russian parliament, without any significant changes. She urged MPs to find out what hinders their adoption, while also assuming that the legislation might be of poor quality and should be rewritten. The official also noticed that Russia has all the necessary data for a digital breakthrough, but the delays with legal framework force startups to seek other jurisdictions. Earlier this month, the chairman of the Russian Duma, Vyacheslav Volodin, announced that the bills on the digital economy, including the ones on digital financial assets, digital rights and crowdfunding, will be a priority during the upcoming parliamentary session. He also urged lawmakers to create a favorable legal environment for the development of the digital economy in Russia. Later in January, the head of Committee on Financial Markets, Anatoly Aksakov, set a deadline for the discussion, stating that the parliament will review the crypto bill by the end of February. As Cointelegraph previously reported, the Russian parliament passed the crypto bill in the first reading May 2018. However, after being edited, the final version received criticism from members of the crypto industry and later was sent back to the first reading stage. Bloomberg, amid bear market, crypto venture fund strategy wins out over hedge fund model. Amid the 2018 market slump, the launch of new crypto venture funds for the first time exceeded that of new hedge funds in the space, according to a Bloomberg report on January 30. Bloomberg cites data from crypto fund research that indicates that 125 new crypto venture funds, which typically provide capital in exchange for an equity stake, launched in 2018, as compared with 115 new investment-oriented crypto hedge funds. In 2017, by contrast, new hedge funds outnumbered venture funds by 47, 136 hedge funds as compared with 85 venture funds. In 2016, 36 hedge funds were launched as compared with 16 venture outfits. Bloomberg interviewed multiple industry figures who attributed the shift to the weakness in the initial coin offering (ICO) market, which was hit last year by both depressed cryptocurrency prices and a regulatory crackdown whose ultimate consequences remain to be seen. With so many investors burned by the difficult trading climate, the moment is opportune for venture capitalists, as Jeff Dorman, partner and portfolio manager at Los Angeles-based Arca, argued. There's going to be a lot of opportunity in distressed buying and even activist investing. Often you can buy below even the cash value of the company. Kyle Samani, managing partner at Multicoin Capital Management in Austin, Texas, which has historically pursued both a venture strategy as well as making token investments, noted that funds have silently transformed from hedge funds into venture funds as their liquid portfolios shrank in value, making a very high percentage of AUM, assets under management, illiquid. Another aspect of the changing tide is the reportedly rising popularity of SAFTs, simple agreements for future tokens, which allow funds to buy yet-to-be-issued tokens at slashed prices of up to 80%. Pantera Capital Management's Paul Veridicate told Bloomberg that Pantera's own eco-investment fund is getting a lot more similar to venture, and that SAFs in particularly are at a risking strategy that is very helpful. Bloomberg cites data from the Eureka Hedge Cryptocurrency Hedge Fund Index, which estimates crypto hedge funds' losses last year to have been about 70% on average. Last fall, a report from weekly crypto news outlet Dire revealed that traditional venture capital investment in blockchain and crypto firms had almost tripled in the first 3 quarters of 2018. Cryptocurrency lending firm Genesis Capital processed over $1.1 billion in 2018. Cryptocurrency lending company Genesis Capital processed $1.114 million in borrows and lends last year, according to the recently released Digital Asset Lending Snapshot for Q4 2018. At the end of Q3 2018, the company published its first Digital Asset Lending Snapshot, which reported that Genesis Capital only processed $553 million at the time counting from the start of its activity in March 2018. Thus, the company concludes that Q4 loan originations increased more than 100% in the final 3 months of 2018 compared to the prior 6-month period. The company claims that, despite a 44% price decline in Bitcoin, BTC, its loan book increased to $153 million in active loans, up $20 million from the third quarter. Furthermore, according to the company, the most active months to date were November and December 2018, since it reportedly saw new hedge funds and trading firms utilizing spot borrow. Summary Genesis Capital Statistics. Source, Digital Asset Lending Snapshot. In the last quarter of 2018, the company also launched fiat currency lending with crypto collateral. The firm explains that this new service has been developed in response to demand from its institutional clients, stating that long-term digital currency investors with appreciated assets can borrow cash against their crypto holdings without triggering a taxable event. The company further notes that Ethereum, ETH, borrowing more than doubled since Q3 but still only accounts for less than 10% of our loan book, well below the highs seen in Q1 and Q2. As Cointelegraph reported at the beginning of the current month, lenders in the cryptocurrency industry are reportedly weathering the recent crypto bear market better than others. Michael Morrow, the chief executive officer of Genesis Capital, said at the time that the bear market has certainly helped, at least has fueled the growth. Also, Recently news broke that Mike Novogratz's crypto merchant bank Galaxy Digital is reportedly raising at least $250 million to offer loans to crypto-related firms. Abra CEO, crypto firms' route to remittances at scale will be complex but successful. Bill Barrett, CEO of crypto wallet provider and payment startup Abra, believes that consumer cross-border payments and remittance services at scale continue to be a struggle for many crypto firms. Barrett made his remarks during an interview with blockchain news source Breaker Mag on January 30. As Barrett outlined, Abra, which counts around 500,000 users in over 100 countries, and supports 30 crypto assets and 50 fiat currencies, was founded with the aspiration to create a crypto-based global bank, which would enable worldwide, frictionless money transfers and credit services. Yet even as the service gains traction as an investment platform, the CEO argued that expansion in the money transfer space poses a greater challenge, particularly in the field of remittances. Barrett recalled an Abra initiative to establish a network of on-the-ground agents to provide cash to recipients of crypto money transfers, explaining that the cost of deploying their running network in the Philippines would have cost $1 billion and not made financial sense. The cost of customer acquisition in the remittance space is incredibly high. The likes of Western Union, Zoom, and Remitly spend anywhere from $75 to $125 to acquire a customer in that space. The CEO outlined that overcoming the upfront costs of providing crypto remittances at scale is more likely to be achievable if a service can first establish a million-user network for other services, and then move on to providing crypto-enabled remittances or low-cost microloans. With these latter both often cited as being keys to greater global financial inclusion, Barrett responded that crypto's route to banking the unbanked will be complex behind the scenes, but will ultimately tackle immediate and concrete concerns, such as: can I get credit in a pinch? Can I send or receive money at reasonably low cost? And can I invest? If I'm saving my family's money, even if it's only $50 a month, can I invest that money, or do I have to leave it under the mattress? And can I invest it in something other than my country's failing currency? The CEO suggested this complexity may come in the form of crypto-collateralized assets, enabling people to manage their cash, stocks and commodities without recourse to a third party. You've got a combination of hard money and regulatory arbitrage to solve real consumer problems. That's what I think it's going to take to break into developing markets. If people can have the keys to their funds on a smartphone, they don't have to trust the government, they can be in control, they can get access to major overseas markets for investing. As reported, Monero, XMR's Ricardo Fluffy Pony Spagni has recently commented on the phenomenon of regulatory arbitrage not from a consumer perspective, but from that of emerging cryptocurrency firms. Spagni said that while decentralized finance may not immediately wrest military and political might from the world powers' hands, regulatory arbitrage could lead to an interesting brain drain and global redistribution of talent and innovation. Report: nearly 80% of crypto event attendees are male. 79% of attendees at crypto events are male, according to a report by events-oriented software firm Bizabo on January 28. After analyzing the registration information of 100 different cryptocurrency-related events in 15 countries, Bizabo found that the overwhelming majority of attendees were male. In the course of the survey, Bizabo took data from the United States, the United Kingdom, Belgium, Canada, Israel, Hong Kong, China, and Australia, with the US leading other countries in the number of registrants and attendees at crypto events. 57% of attendees were employed in the financial sector, while other registrants at crypto events worked in such fields as IT, 14%, computer software, 13%, and banking, 10%, among others. Alon Alroy, co-founder of Bizabo, said like the tech industry, at large, there is a lack of gender diversity in the overall virtual currencies space. Alroy added, the lack of gender diversity in attendees speaks to the industries most of the registrants come from. The financial services and technology sectors have all struggled with inclusion, and that has a cascading impact on the gender mix at these events. In November 2018, the firm released a Gender Diversity and Inclusion in Events report, which found that 70% of all event speakers in the US, Canada and the UK were male. In that study, the US exhibited the most inclusion, with 35% of its speakers female and 65% male. Crypto companies have conducted their own research into the demographics of crypto investors. In September 2018, crypto finance company Circle, published a study which shows that millennial women invest in cryptocurrency at half the rate of men. While women may still be underrepresented in the crypto and blockchain industries, a June 2018 report from the UK-based crypto exchange Block Exchange showed that the amount of women considering crypto investment had doubled since the start of the year. Wikimedia Foundation partners with payments provider BitPay to accept BTC, BCH donations. United States crypto payment processor BitPay and the nonprofit and charitable organization that operates Wikipedia, the Wikimedia Foundation, have partnered to accept crypto donations, according to the official press release published on January 29. The Wikimedia Foundation had already accepted Bitcoin, BTC, but the aim of the new partnership with BitPay is to be able to accept donations in Bitcoin Cash, BCH, the press release states. BitPay's chief commercial officer, Sunny Singh, commented on the new partnership. Bitcoin and Bitcoin Cash are one of the cheapest payment options available, so more money goes to charity rather than paying fees. Wikimedia does so much good around the world that it is a privilege to help them raise money. Back in November, Singh had forecast that Bitcoin would hit $15,000 to $20,000 by the end of 2019, citing the upcoming entrance into crypto by leading financial sector giants such as Intercontinental Exchange, ICE, and Fidelity, who both have plans to launch their own crypto-based investment products. Previously in September, Singh had also underlined that altcoins will never come back, while Bitcoin, calling it the leader in the space, would rebound in 2019. BitPay reported seeing over $1 billion in transactions this past year, along with record-high transaction fee revenue, Cointelegraph wrote on January 17. Singapore, regulator warns of online scam claiming gov't adoption of crypto. The Monetary Authority of Singapore, MAS, has warned the public against an alleged scam claiming that a cryptocurrency is officially adopted by the government, according to an official statement on January 29. MAS, which is both Singapore's central bank and the country's financial regulator, writes that the fraudulent scheme is being spread through websites that offer crypto investment using false data attributed to the government. The fraudulent websites reportedly claim that Singapore is adopting a cryptocurrency as its official coin, and ask users to provide personal and financial data to buy the crypto on an exclusive basis. Apart from reporting on the new crypto scam, the MAS has again warned the public in the statement about common problems in investing in cryptocurrencies or digital tokens, emphasizing that such investments are associated with high risk. In addition, the Crypto Regulation Responsible Authority has pointed out multiple recommendations published since 2017, including the latest one published in December 2018. Last week, the MAS banned the local initial coin offering, ICO, project from conducting a security token offering, STO, in Singapore, stating that all STOs have to comply with the country's securities laws and are required to register with the MAS. Recently, the Malta Financial Services Authority also issued a warning against an alleged global scam scheme known as Bitcoin Revolution. The crypto scam allegedly represents a typical get-rich-quick scheme, and operates through the website thebitcoinrevolution.org and several other unnamed websites. Gaza's ruling group Hamas seeks funding in Bitcoin to combat financial isolation. The militant arm of Hamas, the de facto ruling authority of the Gaza Strip in Palestine, has appealed to its supporters to send it funds using Bitcoin, BTC. The appeal was made via the official Telegram channel of Abu Obaida, a spokesman for Hamas's ad-Din al-Qassam brigades, on January 29. Hamas, which comprises social service arm Dawa and militant faction is ad-Din al-Qassam brigades, is deemed to be a terrorist organization, in whole or in part, by several countries and international organizations, including the United States and the European Union. Russia, Turkey and China are among those major world powers who do not designate the group as a terrorist entity. In his message, Abu Obaida called upon all lovers of the resistance and the supporters of our righteous cause to support the resistance financially using Bitcoin currency, adding that an exact funding mechanism for transacting the crypto would be announced later. He continued, "The Zionist enemy is fighting the resistance by trying to cut its support by all means, but the resistance lovers in all the world are fighting these Zionist attempts and are seeking to find all possible support for the resistance." Hamas has governed the Gaza Strip since 2007, after winning a military conflict against the Palestinian nationalist political party Fatah, a struggle for power that ensued from the latter's defeat in the parliamentary elections of 2006. The Gaza Strip notably continues to be subject to a land, Air Sea blockade imposed by Israel and Egypt in the wake of Hamas victory, which severely restricts the movement of people and goods. Abu Ubaida's turn to Bitcoin comes in the immediate context of Israeli Prime Minister Benjamin Netanyahu's decision to temporarily freeze millions of dollars in Qatari aid, including $15 million a month to pay the salaries of Hamas civil servants, from entering the Gaza Strip, in retribution for a recent flare-up in border tensions between Israel and Hamas. Aside from the Gaza Strip blockade, given Hamas' designation as a terrorist entity in many Western countries, many global banks bar services to the group via their anti-money laundering (AML) and illicit terror financing prevention mechanisms. As reported, the U.S. House of Representatives passed a bill last September that would establish a crypto task force to combat terrorist use of cryptocurrencies. A congressional hearing earlier that month had nonetheless concluded that while Al-Qaeda, the Islamic State and other such terrorist groups have all attempted to raise funds through crypto, their success has been limited, and that in many instances, fiat currencies provide more robust anonymity for illicit fundraising. ConsenSys developer joins Ethereum Classic Cooperative as executive director. Bob Somerville, a developer at blockchain tech company ConsenSys, has joined the Ethereum Classic Cooperative as its executive director, according to an official announcement on January 29. The Ethereum Classic Cooperative manages the development and growth of the Ethereum Classic, ETC, cryptocurrencies protocol. Ethereum Classic is the result of a hard fork in 2016, arising out of differences into how to respond to the high-profile DAO hack of the Ethereum, ETH, blockchain. Per the announcement, Somerville will develop relationships that help the mission of the organization and grow Etcetera's development and community. Somerville will also support ongoing Etcetera initiatives such as Peace Bridge, a bridge that transfers ETH and Etcetera between two networks, and Cody, an upcoming proof of authority testnet. Somerville himself said, "I would like to heal the wounds of the past, and to help everyone get past this zero-sum thinking. I would like the Etcetera community to be seen as it actually is, a strongly principled group of people who develop useful technology, rather than an ideologically driven group of zealots with no technical development." Earlier this month, Ethereum Classic developers said that a mining pool claiming over 50% of the network's hashrate was most likely selfish mining. The devs explicitly stated that the previously noted hashrate consolidation was not a 51% attack, and that purported double spends were not detected. American cryptocurrency exchange Coinbase had published a blog post stating that it detected a deep chain reorganization of the Ethereum Classic blockchain that included a double spend on January 5. Coinbase temporarily halted deposits and withdrawals of Etcetera. Ethereum Classic is currently the 17th largest cryptocurrency by market capitalization, according to data from CoinMarketCap. At press time, Etcetera is trading at $4.03, up 2.76% on the day. Japan, major messenger line partners with financial giant to create blockchain alliance. Major Japanese messaging app Line has signed a memorandum of understanding with local financial giant Nomura Holdings to form a blockchain alliance, a press release reveals on Wednesday, January 30. Nomura, which provides investment, financing and related services to individual, institutional and government customers, Line and LVC Corporation, which oversees Messenger's digital asset and blockchain business units, will sign a formal contract by the end of March 2019. The three partners are considering establishing a financial alliance focused on blockchain. More details will be announced closer to the date, according to the press release. Line and Nomura have successfully partnered before. Earlier in 2018, they set up a company to provide securities brokerage services and investment advice, where Nomura would own 49% and Line control the remaining 51%. According to news website Finance Magnates, the firm has not yet been launched. As Cointelegraph previously wrote, Japan's major messenger team is actively involved in developing crypto products. In January 2018, Line announced it would launch its own crypto exchange and in-app trading space for its 200 million active monthly users, and applied for the relevant license. Later last year, Line officially launched its in-app currency, dubbed Link. They also announced there would be a total of 1 billion Link tokens, while 20%, or 200 million tokens, would be kept as a company reserve. The tokens can be used as payment means for a range of Line services. Bahamian firm to boost local economy with blockchain-based sunken treasure project. Bahamian tech company Po8 has developed a project that aims to register data of excavated sunken artifacts on blockchain, according to a press release published on January 29. Po8's project addresses blockchain as a unique method to boost the local economy by profiting from sunken treasures in the waters surrounding the island country, which is reportedly worth around $100 billion. As estimated by Po8, the project will contribute $60 million a year to the economy of the Bahamas, as well as create more than 100 jobs at peak seasons. The blockchain-based marine project writes that each excavated artifact will be provided with a cryptographic token known as non-fungible token, NFT, that converts the rights of recovered objects into a smart contract. While NFTs are set to digitize the economic value of objects so they can be sold and traded worldwide, the physical artifacts are set to be located in the custody of the Po8 Museum Foundation, where they will be exhibited. The press release notes that since the shipwrecks usually contain metals, recovering them will help the marine ecosystem and support reef restoration. Po8 plans to replace the excavation sites with artificial reefs to this end. The marine archaeology team gathered by Po8 includes Titanic expeditioner David Gallo and Amazon Apollo F1 engine recovery team member Troy Olone, according to the press release. In July 2018, South Korean firm Shinil Group announced it found Russian armored cruiser Dmitry Donskoy that sank 113 years ago, claiming that the ship was loaded with gold worth $131 billion. The company further introduced its own cryptocurrency, claiming to reimburse gold from the sunken ship, with the token reportedly having attracted around $54 million in investments from around 100,000 investors. Subsequently, the Shinil Group was accused of defrauding investors, with the company's CEO Choi Yong-suk having admitted that there was no clear evidence that the ship contained any value at all. Bitcoin approaches $3,500 as top cryptos see growth. Wednesday, January 30. Nearly all of the top 20 cryptocurrencies are reporting moderate to notable gains on the day at press time. Bitcoin, BTC, is approaching $3,500 again, according to Coin360 data. Market visualization from Coin360. At press time, Bitcoin is up over 1% on the day, trading at around $3,474, according to Cointelegraph's price index. Looking at its weekly chart, the current price is lower than $3,612, the price at which Bitcoin started the week. Bitcoin 7-day price chart. Source: CoinMarketCap. Ripple, XRP, has gained over 10% in the 24 hours to press time and is currently trading at around $0.317, according to Cointelegraph data. On its weekly chart, the current price is lower than $0.319, the price at which XRP started the week. Ripple 7-day price chart. Source: CoinMarketCap. Ethereum, ETH, the second largest altcoin by market cap, has also seen its value increase by about 4% over the last 24 hours. At press time, ETH is trading around $109, having started the 24-hour period about $3 lower. On the weekly chart, Ethereum's current value has dropped from $119, the price at which the coin started the week. Ethereum 7-day price chart. Source: CoinMarketCap. Among the top 20 cryptocurrencies, the only one experiencing losses is Binance Coin, BNB, which is down over 0.5% over a 24-hour period. The combined market capitalization of all cryptocurrencies, currently equivalent to about $115.8 billion, is lower than $121.1 billion, the value it reported for most of last week. Total crypto market cap 7-day chart. Source: CoinMarketCap. As Cointelegraph recently reported, about $1.7 billion in cryptocurrency had been obtained via illicit means in 2018, according to newly published research. Also, an analysis recently released by Cointelegraph illustrates that while United States President Donald Trump ended the partial government shutdown, the damage it did to cryptocurrency adoption may be permanent. Japanese finance giant SBI Holdings, blockchain firm R3 officially announced joint venture. Japanese financial services company SBI Holdings has officially announced a joint agreement with the United States blockchain consortium R3 to work in Japan, according to a press release published on January 29. Back in December, SBI Holdings had already revealed its plans, according to an interview with R3 CEO, to partner with software enterprise R3 to develop local use of its Corda blockchain platform, Cointelegraph reported on December 6. Yesterday's press release was an official announcement of the partnership. SBI Holdings and R3's joint agreement aims to promote the development of financial services backed with distributed ledger technologies, DLT, with plans to expand its businesses in the Eastern Asian region. According to the press release, the new joint venture will support provision and introduction of the Corda license, arrange schemes for its actual use beforehand, as well as promote collaboration with overseas offices of R3 and other Corda partners. Previously this month, R3 had announced the launch of its Corda network, which will allow for the transfer of data and digital assets between business networks and the different decentralized applications running on the Corda platform, CordaApps. R3 has over 300 partners to date for collaboration on developing its open-source blockchain platform Corda, Cointelegraph wrote January 16. Research reveals $1.7 billion obtained via crypto thefts and scams in 2018. About $1.7 billion in cryptocurrency had been obtained via illicit means in 2018, according to research published by crypto analytics company CipherTrace on January 29. Of that $1.7 billion, over $950 million was stolen from crypto exchanges, representing a 3.6 times increase over 2017. On the other hand, at least $725 million was lost in 2018 to scams such as Ponzi schemes, exit schemes and fraudulent initial coin offerings, ECOs. CipherTrace also listed what the company believes to be the top 10 cryptocurrency threats. The highest is SIM swapping, which is a kind of identity theft involving taking control over the victim's phone number, usually to obtain access to two-factor authentication codes. Other major threats cited include crypto dusting, which involves sending tainted cryptocurrency to huge quantities of addresses, and the evasion of international sanctions with crypto promoted by states like Venezuela and Iran. The report also references cryptocurrency mixers, non-licensed shadow money service businesses, crypto-jacking attacks on data centers and Lightning Network anonymity. The research warns about decentralized stablecoins, which could be anonymous, online extortion and blackmailing and, lastly, cryptocurrency stealing ransomware that not only prevents access to user data, but also steals wallet private keys. As Cointelegraph recently reported, research outlined by blockchain analytics company Chainalysis has revealed that two probably still active hacker groups have reportedly stolen $1 billion in cryptocurrency. Also, news broke yesterday that 2 weeks after it first reported a hack, New Zealand-based cryptocurrency exchange Cryptopia is still compromised by cybercriminals. Russia's Ministry of Education introduces system for tracking diamonds via blockchain. Russia's Ministry of Education and Science, Minobrannoki, has introduced a blockchain-enabled platform for tracking natural diamonds, government-backed news agency TASS reports today, January 30. The new Russian diamond tracking technology claims to fully guarantee the authenticity of diamond products across all the supply chain, from extraction and polishing to the final owner. Based on emerging IT technologies and blockchain, the new system intends to prevent market participants from losing their financial assets since the diamond market has both natural and synthetic diamonds, as well as fake stones, TASS reports. According to Minobrannoki, the technology has been developed by Russian startup bitkarat.com, which was founded by graduates of the Russian Technical University MISIS and the National Research University. Russia's Ministry of Education and Science explained that in the new systems process, each diamond acquires a digital code that is recorded on a distributed ledger and shared between all the participants of the chain. The system also allows for the recording and tracking of the history of transfers of ownership, and reportedly guarantees protection from security data breaches. Minobrannoki emphasized that the basic principle of blockchain will allow the system to trace all the transactions, including each attempt to edit the code, which will automatically signal a falsification. The ministry added that initiative's developers are planning to attract investments in the coming year. In October 2018, the largest global diamond mining firm, Russia's Alrosa, joined the pilot of fellow industry giant De Beers blockchain-based platform for diamond supply chains. Previously in 2018, Hong Kong-based jewelry retailer Chow Tai Fook Jewelry Group had also introduced a blockchain-powered diamond tracking platform developed by blockchain startup Everledger and secured by the IBM blockchain platform. Local media, Iran reportedly in talks with 8 countries to use crypto transactions. Iran is reportedly negotiating with 8 countries to carry out financial transactions in cryptocurrency, local daily newspaper Tehran Times reports on Monday, January 28. According to the article, Iran has already entered negotiations with Switzerland, South Africa, France, the United Kingdom, Russia, Austria, Germany, and Bosnia, and the countries have reportedly visited Iran to discuss the matter. It was not immediately clear whether the news concerns the national cryptocurrency that Iran is allegedly set to launch in the near future. However, the article notes that the talks on crypto transactions were held in order to circumvent the ongoing United States sanctions against the country, which matches with the main stated goal of Iranian coin. In November 2018, U.S. President Donald Trump fully restored all Iranian sanctions that had been eased in 2015, with the ultimate goal of reducing the U.S.'s use of Iranian oil. The U.S. administration has warned about severe penalties for companies that evade the imposed sanctions. In a recent example, Huobi's top executive was arrested in Canada at the request of U.S. prosecutors that had charged her with violating Iran sanctions. As Cointelegraph reported earlier this week, Iran could unveil its state-backed cryptocurrency at the Electronic Banking and Payments Systems Conference in Tehran, which takes place early February. A central bank-issued digital currency pegged to the national fiat, rial, could serve as an alternative to SWIFT, the global settlement system that some Iranian banks cannot access. Iran is not the only country that sees cryptocurrency as an effective way to circumvent sanctions. Venezuela developed a national oil-backed currency, the petro, to reactivate its struggling economy and to avoid restrictions imposed by US and EU. However, the experiment has reportedly not been successful. At the same time, Russia is reportedly considering launching a Eurasian Economic Union (EAEU)-backed digital currency along with Belarus, Kazakhstan, Armenia, and Kyrgyzstan.
Thank you for watching. Subscribe for the next video. If you like the video, please give me a thumb up.